and still are technically looking for this European and modern trading session. I'm just gonna um just gonna yeah, like this looks really good to pull higher. Um, like this wick reject occurring at this region of this push, and it's also like the overall thing. But obviously, you just focus on the in play. Prosty. Okay. So actually, yes, like this honestly looks insanely good. So obviously, first of all, this is all rooted on the higher time frame narrative of what that is for this given day. Um, but so I'll go down this, but yeah, right. So this bar closed like that. We are long, for sure. But then obviously this is the lower hand. You look to the left, see if there's any sus price action to the left. There is. There's this like low, which is really close to our lower hand, which like it could easily wake below. So, and then you're also placing your stop loss on the basis of the um the likeliness of the given day's direction and actually moving in that direction. So, and you're basically providing enough room relative to like the prior zone at like the zone to the left, which makes sense to cover a portion of, whether that's half or 3/4 or the lot. Um, Basically providing enough room for like to give the potential of your trade like the room to actually play out. And then obviously I'm just going for a 1-to-1, but now with this re-locked in perspective of how I'm doing it, which is just simply looking at the way that recent bars close, so like the way they do amongst the region of the push that's in play and where they close the way they do. So like this bar right here, it closes a wick rejection right at the very high overextended region of this push to the upside, which was comprised of a sufficient price coverage and a yeah, a fine healthy candle, a fine candle quantity, and right above previous high and push range high with a wick rejection, suggesting a likeliness to reverse. But that's actually a pretty nice thing. But anyway, yeah, like with this new locked in perspective, I don't need to like if for example the market pushed up to about here and then like this region was just a 1-to-1, I would just target that anyway. I would just put that on. I wouldn't wait for a retrace or whatever. EKB LSMEM. I would just go straight into it. But now that I'm kind of looking at this, because like obviously you zoom into the chart perspective at hand, and then you conclude what you're gonna do. So this would be the low, and then this would be the zone to the left, which like it just looks very sus. Like this, price action to the left is low, is very close to here, and it's just kind of sus. That's what I called it. I've always called it that, even when I didn't trade this flow based style. I still utilize this kind of stop loss placement technique, which was good. Anyway, so like this is like plain sight liquidity for this zone, and you really wouldn't want your stop here because it could easily dip down, and then or maybe just dip down a bit and then push higher, and then obviously, but yeah, so like you got this zone here and then you got this zone here. In my opinion, it would make sense to cover at least 3/4 of the zone, so about 248. Well, if you just draw your line to about 3/4, yeah, and that should be good. And then like obviously what like I'm also gonna have to start to do now is, and also this can just if this close bullish, right? We are in. To be honest, even if it closes somewhat bearish, if it still closes a bit below the open but closes relatively near its open, I'd probably still execute this, but I don't know. We'll see just how it looks. But yeah, you can easily get a 1-to-1 to the highs of the playable range. Um, And what I'm also going to have to start to do is, hang on, can I like, yeah, that's better. Oh yeah, that's way better. So yeah, what I'm also going to have to start to do is also have my computer up. Because we're going to be executing on the live bar, right? So we're going to have to be like dragging with stop loss. Of course, the lot size isn't going to differ that much, so maybe we could just do like an average of K and just execute there, and then just target like the initial 1-to-1 region. You know, maybe it doesn't have to be too precise. Of like, oh god, the market closed at this price and we're not in with the right risk, according to the SL and entry. Um, so yeah, because obviously we're moving with price. Like I mean, in the past couple of trades that I've took with this method, well, like with this flow based approach, which I got kind of on till with, it would usually be too. They would usually close in too much of the playable range to get a 1-to-1 to the high. So I would have to then execute at the price which I could get the 1-to-1 at, and it was relatively easy to execute on and stuff because you could literally just write your lot parameter here. But anyway, let's go down into the analysis. So we've got 5 minutes, so we can do it on this FX thing. Yep. So we'll just start on the 3 month because I've actually never looked at the 3 month with this new locked in perspective since. But yeah, so it's relatively new in its bar. Alright, well, first of all, so you look at the most recent bar close and how it closed the way it did amongst whatever pushes in play. Now, you can see that there's like short-term pushes that are in play, right? So you got this push, wick reject at the highs, it then reverses, pushes lower, then you got like this short-term wick rejection here. You'd want to investigate how this looks on the lower time frames. Clearly it was bullish because obviously on the lower time frames this would have been a push lower, it would have started to probably wick reject, and then obviously you got like that wick rejection and the reversal took hold and it just started to impulse to the upside basically, with strong, in this case, bullish bar closes, which we can look at closing at the highs of the region of the push that's in play, and then but also the bars, the high the like the closing at the highs of the bar with like a sufficient momentum, range expansion push, like bullish bar strong close, adding to the case for further bars likely to also keep extending to the upside, expanding to the upside, same thing. But yeah, anyway, so them short-term pushes are still in play, but then you kind of got this wick reject and then bullish close. So to be honest, it does look good to push higher, but this wick rejection at the highs of this, yeah, overextended to be honest, because look, I mean, look how many bars are pushing. It's not many. So this is like an overextended rally to the upside on the 3 month. You have to flow with the market according to how it's setting up, like according to what pushes are in play now. Yes, I'm also keeping an eye on the time because I'm rambling a bit, but yeah, anyway. So this is an overextended push to the upside that this recent bar closed the higher region of, therefore with a wick rejection. Now the monthly, you will see this a bit better. Now obviously here, I mean, like I was going on about that push, it would probably be a bit more evident on the even lower time frames, but I mean, you can kind of see that wick rejection at the low region of a push to the downside, which was overextended, and then it's likely to just reverse. And then yeah, again here, it's most easiest to look and read, like uh a chart, how it's like what the most probable market cycle phase is likely to be in play as of the most recent bar close, like looking at it as of the most recent bar close. So if I wanted to see how the market was actually set up from this bar, meaning like here to push, like you would want to look at how it's set up like I'm doing here, and you can see, well, if that was the case, if you're emulating that, what it would be like here, dragging the chart. I'm not going to, but I mean, you got to push the downside and you got to rally to the upside with a wick rejection. You sat right at the very high region of that push to the upside, which, to be honest, I would kind of say it's a bit overextended, to be honest, and then you kind of get impossible signs of signaling the reversal. Now, anyway, let's flow with now because the time's ticking. So let's see if we can actually get this done in a fast enough period of time. That'll be pretty awesome. So anyway, yeah, the most recent bar closed at the very high region of its push to the upside. It's not overextended, but it did close with a wick rejection right at the very highs of. It's got decent price coverage, meaning the range expansion per bar, and therefore the overall push and plays expansion. Covered a decent amount of prices. You just track that component variable, just to basically see like how overextended is the market relative to the fast push, and then but ultimately it doesn't even matter. You're just looking at the way the recent bar close formed the way it did amongst what region of the push that's in play, and then you can form your narrative with that every single time. So yeah, anyway, you got a wick rejection at the very high region of the push that's in play, signaling the possibility for a reversal. So anyway, let's blast through all this. So the most recent 2 week bar closed with topside wick rejection and doji bar closed right at the high overextended region of the push to the upside. Oh my goodness, we've got a minute left. And this is just signaling the possibility that, like, from this bar, further bars are likely to form with further signs suggesting the reversals nearing, with like further wick rejections to the upside, or it could just take hold all of a sudden, and that like for example, a wick reject and then reversal, and then it just expands to the downside, which could actually still happen. Because obviously this is the 2 week bar in play, and I'm not just for sightseeing, like reading this. But anyway, let's have a look, because we might actually have to live execute a trade. So basically, what I will have to do is I'm just going to keep an eye on this, because this bar could easily flip bullish. So I mean, it's only going to flip bullish about there. So it's basically a 50 pip stop. I really don't think it's going to, though. You kind of get an eye. I remember doing all this back in the June and the July when I was on the big long win streak, which I did cover. But then, from the point that I was almost in my peak when up to now, I was almost in, like, up to this present moment, because obviously I'm going to go higher again, because we are locked in out of no sort of perspective again. It's simple what we do. We literally analyse the way the recent bar closed the way it did, amongst whatever region of the push that's in play, to determine what the most probable market cycle phase is in play and most relevant to possibly occurring and taking place from now. And then you'd flow with how the net whatever is likely to occur from the next bar, and you track the market cycle phase. You track the market accordingly relative to how bars close one after the other. So right here, you close this bar right here. I'll put this thing on. So, I mean, there's no point having this because the time period's done now. But what I have noticed, and what will be interesting, is if you do get a strong bullish bar close with like a nice bottom side wick rejecting, closing relatively near its highs, like this. And then if it does play out, I mean, I'm gonna probably have to look at. To be honest, I might take it on a practice account. Actually, yeah, I am going to. So up to 11, I'll have a cut-off point, and I'm going to just get a 10k practice account with alpha, and I'm just going to risk like 3% on it or something. In fact, no, we'll risk 2, just the standard. We'll not get carried away, because we don't want to do things like that. It's not good. And anyway, yeah, so what I've noticed is sometimes, or rather most of the time, with in a day where it's valid to look for a certain setup, and then you get that like confirmation to look for the setup relative to the given day's like narrative of each of the time frame recent bar closes, how they close the way they did, and what the most probable market cycle phases are in play relative to each of the time frames that we analyze as of this day. And on this day, we just needed to see, which I'll get down to, we needed just see a 1 hour nice wick reject bar close from the OTR region, which we got, and yeah, then you could just look for the ISLQS. Now, ordinarily, I'd be done, but what I've noticed is if a confirmation forms up to, like up to 11, so therefore like 10:45 being the cutoff, like it seems to be fine, and I mean that would only expand the time period another 45 minutes. So mean, like I said, I'd also have to go over everything. So yeah, I'm gonna have to keep on the time again, and I'll execute it on a practice 10k. So yeah, anyway, you see, as I was going on about the 2-week recent bar close, it closes the doji with a topside wick rejection, aka bearish, right at the overextended high region of the push and play to the upside, which had already begun showing wick rejections at the very high region of that push to the upside, which is very overextended, signaling that, but like it didn't really close as any like bar which you could kind of pinpoint as to when like that sort of when, like with like that like real emphasis put on that when, that you could kind of be able to conjure up a reason as to when the reversal is likely to take hold, because this isn't really that clear. But all it's providing you is, and that's going to be the case most of the time, because I mean, like here, same thing. You got to push to the downside. Wick rejection at the very lows region of this overextended push to the downside, massively overextended, in fact. And well, number one, from this recent bar close, you would want to investigate how lower time frame is set up, and then here, as of this most recent bar close, as of here, you've just got a bullish bar close closing at the very bottoming out region of an overextended push to the downside that's already begun wick rejection, or shown wick rejections at the very low region of. I'm just gonna change this. What about this? Okay, advert. Yeah, and all this shows, it all holds significance of is just it holds the same significance as a bearish wick rejection forming at the very low region of a push to the downside. Could be overextended too. Just like it holds the same significance of, for example, wick rejecting to the downside at the very low overextended region. So it's just showing somewhat bullish signs that yeah, that's good. So it's just showing somewhat bullish signs at the very low overextended region of a push to the downside, showing that signs are showing that the reversal's nearing, basically. Like you're getting bullish bar closes. Of course, it's nothing to shout home about. What the hell? But yeah, I think I might actually delete. Actually, no, I better not. Yeah, so you cannot really pinpoint as to when the reversal is likely to take hold, but you're getting bullish bar closes at the lower of extended region of a push that's already begun to show wick rejections at the very low region, of which you got the most recent bar closing bullish at that very low bottoming out region of the push to the downside, signaling that yes, further signs are likely to also be like, or rather, further signs are likely to appear at this region the market's at that also have bullish wick rejections to the downside, and then just further signs pointing towards the reversals nearing, edging closer towards it actually playing out. But as of this bar close, all you could really say is that the reversal's nearing, meaning over the next couple of bars, it's likely to edge closer to you being able to pinpoint as to when, or it's likely to just play out as it did. And then yeah, you track the bars accordingly. So here, wick rejection at the very highs, you'd want to be careful of what's to unfold. You couldn't expect further range expansion to the upside really from here, unless lower time frames pointed towards that being the case. But relative to this sole time frame, you couldn't really conjure up anything. But anyway, you see this most recent bar close with a a bearish wick rejection and closes a doji right at the very high region of this push to the upside, which already began wick rejecting at the very overextended high region of, signaling that the same thing, a reversal is nearing, which can mean many things, meaning further bars are likely to form, pointing towards a reversal taking hold, and you being able to pinpoint as to when, or it's likely to just play out. Maybe form the wick and then just play out. Or further signs pointing towards the reversal are likely to mean further wick rejections and like nothing to shout home about bar closes. That's a new one. So yeah, anyway, the most recent weekly bar closed as a heavy bearish close, but also short-term pushes were in play. Like you can see, they are in play here. You had this push to the upside, and then push lower, and then this. So like you had this push. Wait, hang on. So push up like this, and then you had this wick rejection, and then come down, kind of wick rejection. You come up, you probably wick reject, and then you come lower, and then yeah, and then you come back up, and then here, push up to the upside, and then down, and then you kind of the lower extended region. So, but it is a bearish strong close. So to be honest, it does look like further range expansion could occur. To be honest, since the bar closed, yes, at the very low region of the short-term pushes in play, but also at the very lows of its bar. So, yeah, and then the 4-day just wick rejecting the very high region. 3-day, nice 3-day bar close, but still at the yeah, short-term pushes are in play also here, and it's just closing at the very low region of wick rejecting at the very lows. 2-day, which also closed 2-day. It's the English language for you. Short-term pushes in play. And then you just closed at the very low overextended region of, but kind of with a wick rejection, with heavy range expansion bar in one bar, and then also overextended, with a wick rejection occurring at the very low overextended region of that push and play, short term push and play. The daily recent bar close, again, same thing, just closed with a wick rejection at the very low overextended region of this push to the downside. Showing signs that a possible reversals probably likely to take hold of some sort, whatever magnitude that is. 12 hours, see that better. See that case better. Overextended, wick rejection at the very lows. It's likely that the reversal is going to take hold. Obviously not from the next bar, but it's nearing. You don't know when. You can't pinpoint as to when with this, but you can say that further signs are likely to show, or it's just likely to play out basically. The 8-hour. Oh wow. Is that just Euro hitting the line again or what? Oh no, it's not. This is like some Jason Casper music. Anyway, we've got 4 minutes left. So yeah, the 8th. Fucking hell, mate. Yeah, look at that. That looks pretty good actually. But so you're at the very low overextended region, and you just got a bullish bar close. Again, it's nothing to shout home about. It just holds the same significance as, for example, a wick rejection at the very lowest. You can't really say or pinpoint as to when the reversal is likely to take hold, meaning from the next bar. But all you can really say is that the reversal's nearing basically, so you can't say as to when, but it is nearing. And then the 7-hour, again, same thing, but this wick rejection would definitely need to be investigated on lower time frames, because this would probably lead you to how you are going to have to look at what way you need to see the 1-hour setup. But yeah, anyway, dropping down accordingly. So we got the 4-hour closing as a strong bullish close right at its highs, amongst at the high region of its push to the upside, which it is kind of pointing towards a reversal. I would probably say for the 4-hour it's likely to push to here, so this price level. But yeah, the high reaching of it to push to the upside. The 2 hour, it was this bar close because I've looked at this over a lot. I was very tired this morning though. I didn't go to the gym first thing. I mean, I'm off my part-time job, so and anyway, even when I'm at that place. I've always got the time period that I trade, which is 7 till 10, free because I don't. My part-time isn't until 2 till 10 p.m. and I'm only there about 3 days a week, which I like to keep it at, for this purpose. But yeah, so the 2 hour, you see short-term pushes are in play, and you're at the very overextended high region with a slight wick rejection at that very high region. Then anyway, so like you kind of the overextended region, and then the 1 hour, you're also like at the overextended region, but it did close relatively bullish at its high, likely to possibly have some steam left to go at the upside. Probably say about here to be honest, but if you mark out the appropriate fib pull, to be honest, yes, I would mark this. Yeah, I'm spitting all over my screen, man. Yeah, I would mark that. And visual 1. Okay, why isn't that saved as that? There we go. And then I should also just delete this. Right. So based on the overall time frames, like the 12, the daily, and then the 7, the 8, it does look good to go higher, but you would definitely want to see a nice 1 hour bar close at this region. And to be honest, I'm probably not going to execute this. Okay, good. I'm not going to execute this on a practice account. I would just observe it. It's kind of FOMO vibes I'm getting from that decision. So yeah, anyway, all the time frames, how they settle, like the 2 hour, like rejecting the overextended region, 2, possibly signaling the reverse from this region that the market sat at amongst its push, and the signs the recent bar close signaled or signified with regard to how it closed at that region, signaling that the reversal's nearing. And the 7 hour, wick rejection, 8 hour, not really that providing that much conviction to you. You just want to see a nice 1 hour bar close at this region. And then anyway, like, you get that wick reject bar close right here. And then you could just drop down and look for the 15M ISLQS, which you didn't get. So, I'm just going to quickly finish this off real quick.